All right, today we're tackling a really interesting one, Symbotic. Ticker symbol SYM. This company is right at the center of the whole AI and robotics explosion. I mean, they're completely changing the game for how global supply chains operate. And you know what? Their stock has been on an absolute roller coaster lately, which just might, mean there's a huge opportunity on the table for us. Welcome to Value Vest Daily. We've got a big question today, especially for anyone keeping an eye on the AI sector. And here's the million-dollar question, right? When you see a stock take a nosedive like this one has, are you buying the dip or are you just catching a falling knife? Is this a golden ticket to get into a future giant on the cheap, or is it just a trap?
Okay, so here's the setup. The stock got hammered, dropping about 20% basically overnight because of a big Wall Street downgrade. Ouch. So that's what we're going to do today. We're going to dig in, break down the facts, look at the tech, and really figure out if this pullback is the golden opportunity we've been looking for. Let's do this.
All right, first things first. What's all the buzz about? What does Symbotic actually do that makes them such a hot topic in this whole AI boom? So picture this. On one hand, you have the old school warehouse. You know the one. It's chaotic, it's manual, things are slow, and mistakes happen all the time. Now look at the Symbotic way. It's a whole different universe. We're talking a fully automated, AI-driven system. They've got these little robots, they call them Symbots, zipping around at up to 40 miles per hour, sorting everything with, get this, 99.99% accuracy. This isn't just a small step up, folks. This is a total revolution for warehouses. So what's their secret weapon? Well, it's all about where they play the game. See, a lot of robotics companies are obsessed with e-commerce, picking one little thing for your online order. Symbotic, they're going after something way bigger, way more complex. They call it the middle mile. Think about it. This is the heavy lifting, the B2B logistics of moving huge quantities of stuff from a giant distribution center to restock an entire Target or Walmart. It's a massive, multi-trillion-dollar puzzle, and honestly, almost nobody else is competing with them here. So what's their moat? What really protects them from the competition? It's not just a faster robot, okay? The real magic is the AI software. It's the brain behind the whole operation. And here's their killer app. The AI can perfectly, and I mean perfectly, pack a pallet with all sorts of different boxes, just like a game of Tetris on steroids. This creates a pallet that's 100% ready to go straight onto the store floor. You have no idea how much time and money that saves the retailers. It's an incredibly complex puzzle that, frankly, their competitors just haven't cracked. And that software brain? That's what makes this whole thing ridiculously scalable. Okay, the tech sounds amazing, right? But what about the money? Do the numbers actually add up? Let's dive into the financials and the charts and see what's really going on. So let's take a quick look under the hood. You're looking at a company with a market cap around $38 billion. And check out that revenue growth. We're talking 40 to 50% year over year. That is flying. Now, you're going to see that negative PE ratio and think, wait, they're not profitable? And you're right, they're not. But that's because they are in absolute beast mode, just plowing every single penny back into growing the business. And the best part? They've got about $1 billion in cash sitting there to fund all this expansion, so they're not drowning in debt. Now this is a chart I absolutely love to see as an investor. A huge chunk of the company is owned by insiders, including the CEO, Rick Cohen. We're talking serious skin in the game here. Their money is right there alongside yours. On top of that, you've got the big institutions holding a solid piece, and from what we're hearing, the smart money has been scooping up shares on this recent dip. That tells you a lot. Okay, let's switch gears to the charts. The technical picture right now, well, it's not exactly pretty in the short term. The stock is trading below both its 20-day and 50-day moving averages. Think of those as short-term trend lines. But here's the big one. It's sitting right on testing its 200-day moving average. That is a huge line in the sand for long-term investors. This is a real make-or-break spot for the stock, a true tug-of-war between the bulls and the bears. And if we look at the RSI, the Relative Strength Index, which kind of tells us if a stock is overbought or oversold, it's sitting at 46. Now, what does that mean? Well, a reading under 30 usually gets investors excited, thinking it's oversold in a bargain. At 46, it's neutral. It's not screaming, buy me now. So this indicator tells us we might not have hit the bottom just yet. So the short-term chart looks a little rough. Why on earth is Wall Street still so obsessed with this company? It's because the long-term story, especially with their AI software, is just massive. Let's talk about where this could be heading by 2030. Okay, this is why long-term investors are drooling. In a base case scenario, we're looking at a stock price somewhere between 180 and 220 bucks by 2030. That's a $100 billion plus company. But if things go really well, the bull case, we could be looking at over $350 a share and a market cap north of 200 billion. Now that is the kind of growth that can change a portfolio.
So how do we get to those crazy numbers? Here are the 3 things you gotta watch. Number 1, the next earnings call. A blowout quarter could change everything in a heartbeat. Number 2, and this is the big one, landing another whale of a customer. They're already with Walmart, but imagine they sign a Target, a Costco, a Home Depot. Game over. And third, keep an eye on Greenbox. That's their plan to offer this tech to smaller companies, which could open up a whole new market.
But we have to be real here. It's not all sunshine and rainbows. There are major risks. For one, they are super dependent on Walmart right now. If Walmart sneezes, Symbotic could catch a serious cold. Then there's execution risk. These are insanely complex projects. Any delays, any hiccups, they're going to be expensive. And finally, let's be honest, even after the drop, the valuation is still steep. This stock is priced for perfection, which means there is zero room for error. All right, we've covered a lot. Game-changing tech, a wobbly short-term chart, mind-blowing long-term potential, and some pretty serious risks. So let's put it all together and figure out the final verdict. So where do we land? For me, the verdict is a cautious buy, and if you're already in it, it's a hold. Look, the long-term story is absolutely intact, but the charts are telling us to be patient. Jumping in with both feet right this second is probably not the smartest move. We need to see some signs of life, some stability before getting too aggressive. So what's the magic number? What's the level to watch? For me, it's $56. 56. Historically, that price has been a rock-solid floor of support. If you're a long-term investor looking for a safer spot to get in, you want to see the stock either hold strong at 56 or even better, show a powerful bounce off of it. That's your signal. And you know the drill. Please remember, this is all for informational purposes. It's not financial advice. You've got to do your own homework and make your own decisions. It's your money after all. Hey, if you got any value out of this deep dive, do me a huge favor. Hit that subscribe button, give this a like, and share it. Our whole mission here at ValueVest Daily is to bring you totally unbiased looks at opportunities like this before you put your hard-earned money to work. Oh, and hey, one more thing before you go. Is there a company you want us to break down next? Drop the ticker symbol in the comments. We read all of them. And who knows, your pick might just be our next explainer. Thanks for watching.